we know that there's going to be a lot of smaller companies that are not going to make it through these challenging markets. Do we see a lot of MSOs or one or two MSOs that potentially could falter during these times? Hey everyone, welcome to this TDR Cannabis Exclusive. I'm your host, Shad Dales, and thanks for checking in as today we talk obviously about cannabis and where it's at. A lot of people don't throw eggs at me right now because I know it's not good. But one of the things that we like to do here, our podcast, is bring in some great thought leaders, both from companies, from private equity firms, and that's exactly what we're doing today. We welcome them back to the podcast. I think it's been about a year or two since we've had on, but Matt Hawkins, founder and managing partner of Entourage Effect Capital, which is a private equity firm based out of Texas, if I'm correct. And this is a company that has lent hundreds of millions of dollars in the cannabis industry. Good to see you. How are things?
Good, Chad. Ben, how are you guys doing?
Well, for the most part.
I'm just talking about personally. I'm not talking about, if we talk about cannabis, I'm not doing great. But for you guys personally, how are you doing? Everything good?
We're eager for spring. Enough of this cold, overcast weather here in Canada. But, I think it's well, I'm excited to get down to the Benzanga conference next month in Miami, get a little sunshine and see everybody face to face. But needless to say, and I think a lot of investors can relate to how we're feeling right now, is just I don't even know how to put it into words anymore as to where this industry is right now. And I'm sure you can probably understand and relate in the same way.
Totally. I mean, I think frustration is a good word. I mean, it's just there's so many different impediments that keep being put in the industry's way, and it seems like it's like you take one away and another one follows.
Yeah.
But then there's the tried and true problems of 280E and safe banking, and it's just I'm tired of prognosticating about it.
Are you surprised it's gotten, and I don't want to sound doom and gloom, but are you surprised it's gotten like this ugly?
Oh, for sure. I mean, I was talking with somebody about this yesterday, and the reality is that every single person in the industry, if they weren't thinking that by now something would happen legislatively, and they say, and if they tell you that they didn't think that, watch out, they'll lie to you about something else.
Interesting.
Because the reality is, all of us that got into the space in 14 thought there would at least be, 14 and after. That's when we got in. But like, let's say if you got in 18 and 19. Just by the sheer magnitude of what was happening, and then in 20 when California went rec, it was a tidal wave that you just felt like at some point, with all of the different dominoes falling in favor of legalization at the state level, and now you've got 2/3 of Americans living in a state where it's at least medically legal. How do the politicians not listen to us? Yeah. And it's just really frustrating.
Yeah. Ben, I know you're eager to ask some questions. Go ahead.
Yeah, just to sort of follow up on that, even with safe banking, simple safe banking, obviously it was shut down by the Senate the last couple of years going into the end of the year. But the latest one, where the House Banking Committee chair on the Republican side, Patrick McHenry, said that it wasn't a priority, right? So it almost feels like we're starting again, right? Because the bill has to be reintroduced in the 114th Congress and the new Congress, and yet we don't even know if for certainty whether the GOP actually supports it in the House yet, right? So many mixed signals. I don't even know how investors can deal with this, right? Like it just goes on and on. Like you said, a never-ending bottomless pit of disappointment and things stalling out.
You just hit the nail on the head right there, Ben. That they're not investors. They're not doing anything about it because they're on the sidelines right now. Full stop. I mean, there is no new money coming into the space. And until something happens, some type of catalyst, it's going to remain that way. Yeah. That's why it's going to get so ugly for the next 6 to 9 months at least, because I just don't see something happening. I don't see that catalyst yet. The only thing that I can think of that could help the industry in the short term, and I hate to say it because it's awful, but look at what happened with the vape crisis. It took something that awful to get the attention of people to point fingers at the illicit market and say it was all them.
Yeah.
It wasn't us. We can't do it because of the seed to sale tracking and the, all the different specifications have to go into, manufacturing of products. Well, look what's happening with fentanyl right now.
I know. You're right.
I mean, that is, I mean, we don't know. I mean, all these kids that are getting access to, granted, a lot of it is, with speed and other things like that. But the reality is that could just as easily be put in lace, with marijuana be laced with that in the illicit market. What are we going to do? Wait for that to happen?
Yeah. Good point.
And so that to me is the only thing that on the short term we can use in our benefit to say, look, we can't do that as an industry. But if you don't do something about the illicit market, they will.
Yep. You talked about
Okay, so let me
California.
ask you this, Matt. I
ahead.
know. Sorry, we're going a little off script here, Chad, but I want to follow up on that because you mentioned the only near-term catalyst you could see is that. But what do you like? What are your thoughts on the HHS Secretary Becerra possibly descheduling cannabis down the road? I know it's under review right now. If it goes to
Right.
Schedule 3 or higher, that would alleviate the 280E exemption, and then obviously it would improve the quality of the earnings for a lot of these MSOs and really help out. So do you see that as a catalyst? And what do you think that the ultimate result of that review will be? Do you think it's possible that they'll still remain at Schedule 1 after that review?
Again, the only thing I can think of is that while all the merits are there for it not to be a Schedule 1 drug, the reality is the federal government's pulling in hundreds of millions of dollars in tax revenue from this. So it shows you how complicit they are and they're so worried about this being a money laundering scheme. But the reality is they're the ones that are making this happen. And 280E, if that goes away, the effective tax rate on marijuana drastically is reduced. And so the money that gets the federal government after that is going to be a lot less.
Right.
So what incentive do they have?
Right. They don't.
And so it just makes me sick to my stomach to even think about. But granted, you're talking about justice and then revenue on two different sides of the equation here. But at some point, the money is so big. I mean, it's like what California is dealing with right now. California, has been so ridiculous in their lack of enforcement on the illicit market, but they're finally seeing that, wait a minute, our revenue's down.
Yeah.
Well, guess what? You caused that problem because you haven't gone after helping us convert the illicit market.
Mm-hmm.
And then you see what just happened in New York with the governor coming out and saying we've got to do something about this because it's so backwards.
Could you see
But
lawsuits?
it just shows you the short-sightedness of what these state regulators are doing.
Could you see lawsuits against the government at some point?
I mean, I don't see how it couldn't happen. If we continue down this path and you've got this much money at stake and you've got, the Curaleafs and the Green Thumbs that have, large market caps that are just being penalized and penalized and penalized. I mean, why wouldn't they want to do something like that?
Yeah. Yeah.
Yeah, how
Well-
does that not even violate antitrust laws, right? Like when you have
that's
like,
where,
the state
we-
regulatory commission in New York selectively, raising social equity.
The only thing I can think of, Ben, is because it's federally illegal.
Mm-hmm.
I mean, it doesn't fall under that purview. I mean, so that's the other thing is that, the government may be saying, they may have attorneys and justice saying, shit, we better be careful here because if this thing goes legal, we've got a lawsuit on our hands.
Yeah.
Their only answer right now is, well, it's not legal. So, it's up to the states, but it's not even up to the states yet.
Well, I remember October 2021, Ben and I, along with Anthony, were down at Encore or Win, and we were having lunch, our smoked salmon sandwich, and we were looking at share prices. I think Air Wellness was around $30 during that time, was it not, Ben? And
yeah,
we
it
were
was around
thinking,
$28-30. Yep.
Is this a good position to get in right now? And when I look, like, this is a penny stock now. Juicy, penny stock. Like, these are all, it appear to be big winners, big darlings of the space. So I guess my question is, we know that there's going to be a lot of smaller companies that are not going to make it through these challenging markets. Do we see a lot of MSOs or one or two MSOs that potentially could falter during these times?
I don't see how it can't happen. I mean, the reality is that there's debt cliffs coming for almost every single publicly traded company that doesn't have the ability to pay those loans back.
Yeah.
And the reality is there's no capital around right now in any meaningful fashion to refinance those loans. So you either have lenders that are going to extend and kick the can, or they're going to take action. And at some point, lenders will say enough is enough, and they can do some type of assignment to the benefit of the creditors, and because there is no bankruptcy, potentially get a receiver, and who knows, they could get the assets for cheap.
Mm-hmm.
So,
Real cheap.
yeah, and let's take a step back from the doom and gloom for a second, because the reality is that it's still a top line. The compounded annual growth rate in cannabis is bigger than almost any industry of its size, and then some. You've got whatever it is, 30 billion at this point, that has the ability, with any type of conversion whatsoever, the illicit market, to be closer to 60 or 70 billion.
Yeah.
So I think there's enough critical mass there for the industry isn't going to go poof, but there are companies that are going to go poof.
Mm-hmm. How soon do you?
All of our companies, we're just, we are luckily in our 3 funds, we've been able to support the winners with, capital that we've had reserved for follow-on investing, and we're trying to take care of what we think will be the winners. But the money supply isn't endless, and so this period of turmoil has to have some type of an end in sight. Anyway,
Yeah.
I'll get off the soapbox there.
No, I hear you. So what do you think? Like, you've lent a lot of money. How has your company, I guess, pivoted?
Well, we've invested, primarily equity. So it's not all. We're not. I mean, we've done some convertible loans, but we're not a lender. Now that means we are contemplating going forward doing more, convertible debt type instruments, which we've done a few of in the past. But remember, at our core, we're equity guys.
So when it comes to investing, you've said that you've picked some winners. Allocation wise, maybe touch on. I think it's important as we get off this doom and gloom boat and talk about opportunities, if there are any. What are you seeing based on conversations in companies that you still very much like?
Well, and that's going to come back to doom and gloom, because everybody's trying to, it's all about cutting costs, all about preserving cash. Even though the focus also needs to be on growing the top line and, also getting to the point where there's at least a pathway to profitability, it's hard to do when you're plugging holes.
Yeah.
And so every company is dealing with that, even the large ones. There's just no doubt about it. And until we get some help, that's just the way it's going to be.
So you've basically, as far as I understand, created a consulting division, I guess, to deal with the growing amount of insolvencies. So wanted to learn.
Well, let's talk. Let me clarify that, because really what's happened. Remember, we've done a lot of restructurings within our own portfolio.
Okay.
Like, for example, we merged Harborside and Urban Leaf and Sublime, along with Loudpack, which wasn't one of our companies, into State House Holdings, and we've seen firsthand how, even though this is a business that's a top line over $100 million. Talk about a penny stock.
Yeah.
At some point they're going to. I can't speak to forward-looking statements, but we're not in terrible shape.
Mm-hmm.
But if not for that restructuring, and if not for that business combination, which we orchestrated, all those companies would have just disappeared. So that, along with a couple of other restructurings we've done in our portfolio, has led people to come to us and say, we need help. And so we're not. We're on the sidelines primarily with our capital being preserved for follow-ons, and so, heck, it's a good way to be able to bring in some additional revenue.
Mm-hmm.
And so, yeah, we've had a couple of engagements, and we're actively seeking others. And the reality is, there's groups like us are more adept at providing restructuring services to the industry more than anybody else, because we're in this mess day in, day out.
Okay, so speaking of restructurings and distressed situations. We've seen a lot of that in the public markets. Obviously, we don't have to name names. I mean, pretty much many companies are in that boat. So take us to the mindset if you're a retail investor, right? What would you be doing in terms of looking to purchase additional equity? Would you be waiting now to see how the landscape plays out? Is there more significant downside even at these distressed prices, even though many of these MSOs are now, generating $1 billion of revenue over a year, and some are cash flow positive? What do you do in this situation? Do you just wait it out, or what are you doing if you're retail?
Well, first of all, retail investing isn't really our bailiwick in the industry. So and I don't want to give investment advice, but what I think the main thing to think about is, where is the bottom? And Shad, we've talked about a couple of penny stocks that are out there. I mean, how much lower can they go?
I know.
And I don't think some of those companies, are being punished for just the fact they're cannabis companies versus what their balance sheet and income statement might look like. Now they probably need shoring up as well. But does that mean that it's a stock price at zero? I can't answer that.
I know.
But I just feel like as an investor, a retail investor, you just got to ask yourself, what's the bottom?
Mm-hmm.
And how close are we to it?
That's the almighty question, isn't it? Where is the bottom? And man, oh man, this appears it could be it, but we just don't know. What would you say timeline-wise? You talked about some companies that could go kapoof. Are we talking like weeks, months, like this year at some point?
Yeah, I mean, I think it's a 2023 situation. I think we've got, like I mentioned, these debt cliffs that are coming due with a lot of the public companies, and there's no capital to replace that. That's going to be a trigger. I think we've already seen some receiverships in a couple of states.
Yep.
That's going to continue. I have not. I mean, there have been some assignments to the benefit of creditors. I think those will continue as well. I mean, I spoke at a cannabis bankruptcy conference yesterday. Even though there is no bankruptcy in cannabis, but they wanted a panelist to discuss what the options might be for these attorneys that are in the audience, that have clients that could be going through that. So it just feels like it's, I mean, who would have thunk that we'd be talking about that kind of stuff 2-3 years ago.
So when we talk about consolidate, like M&A, a lot of people thought in 2022 that more of the sort of Columbia Care, Cresco deals would go through, and there'd be M&A that way. But it seems to me, with all the receiverships and the distressed assets out there, that we're going to see more of like what we saw with Merrimed and Ermont, like picking up or bolting on smaller companies that just don't make it, that run out of capital. Is that what you foresee too in terms of M&A in 2023 and beyond? That there's going to be more bolt-on situations and bigger companies looking to add strategic assets with companies that just don't make it?
100%. The problem with these big M&A deals, like the Columbia deal you mentioned, is that the agreed to pricing for those things just don't make sense anymore. Mm-hmm. And so, the only way that I think big M&A happens isn't going to be. I'd be shocked if it's with two large entities, but I can see a lot of activity with large entities buying small ones.
Some of the big companies that are well positioned, you can see how this is going to play out. And this is probably the sentiment that was announced in the early days, even cannabis. There's going to be a few players that exist at the end. And this just seems like the perfect storm for a lot of these companies that, let's say, are long-term set up to succeed from a cash position, that they're going to start taking over assets at next to nothing, don't you think?
Because they can.
Because they can.
That's the thing, is they'll be able to. So
the race has gotten a little bit tighter, smaller, less horses, right?
Yeah, that's right, for sure. But even, but the other thing to think about is that even the large companies with their depressed stock pricing, they don't want to use their paper to make acquisitions either, because that just creates crazy dilution for them too. So it's a double-edged sword too. So it's just, these are complicated times, and you can't just say that, I'm going to go buy this company that's worth a penny, and expect there not to be at least, some things to consider, both from your own balance sheet when that happens, because you're also inheriting, the potential liabilities if it's more than just an asset sale.
Yeah. Last thing I want to touch on, what was your thoughts in news recently about Terrascend wanting to list on the TSX? What do you make of that?
Well, I mean, look, there's no question that if plant-touching companies that own U.S. assets can be listed on the Toronto Exchange, that's a great thing.
Yep.
But is that going to be the cure for the ills that exist for the MSOs or the large cap MSOs? I don't think so, because investors are still going to be skittish whether they're trading on the CSE or the TSX.
Okay.
And yeah, there's more liquidity there, but I don't know if that's going to solve all the problems.
Don't think institutions are going to be running in at that right now.
No, not yet.
No. Okay. Well, good. Go ahead, Ben.
No, I was just going to say, last question on this side, since we have you here, and it's been a while, is safe banking or federal reform. Do you see that happening? Because last year it was revealed that big cannabis was out lobbied by big pharma by 52-1, and I know Representative Daines is trying to get the banking lobby more involved here. So will federal reform just simply not happen until cannabis has a bigger lobby? Does it really come down to that?
There's no question that the cannabis lobby needs to pick up its efforts. I mean, I know that we've tried our best to become a little more vocal, and it seems like we're making some progress, but it does seem also a bit haphazard. We have to be more organized, but lobbying isn't. I don't know that world, so I'm learning it. But yeah, I think that's a big problem, and that's when a big pharma is now lobbying 100% against us. That's a big one to have to fight.
Yep.
So it's you have, but in terms of answering your question, Ben, about do I see regulation on the horizon, and the unfortunate answer is I don't.
Yeah.
I think that maybe the safe banking has a chance just because of some of the things we've read lately. And the other reality is that I said this before, but the silver lining in all of this is that states continue to go wreck. I mean, Oklahoma didn't, but you know what? They've got a great medical program.
Yeah.
It didn't surprise me. Politicians are going to have to start listening to their constituents, before too long, on both sides.
We've been saying that for so long, though, haven't we?
Yeah, but now, but again, with the entire Eastern Seaboard now basically legal. I mean, it's but we have to also get the help of the states, like New York, for example, to do it the right way and not be, penny wise, pound foolish as they're setting up their program.
So let me ask you this, because we've talked about this a lot. For somebody that's new about learning about this industry, we've talked about the rollout in New York being bad. Can you give maybe a clear example as to what they've done wrong for people to understand what's happened there?
So, okay, well, let me come out first by saying that I believe social equity is an important part of any business.
Yep.
And I believe that there's a social equity component of this industry that should go in tandem with legalization. But I don't think it has to be part of the business side of things, which is what most of these states are trying to make it do. New York is guilty. They just said, we're not going to give anybody licenses that look, they were giving them to criminals prior to people that were, or the convicted felons versus people with clean records. Yeah. And now I get it, the fact that people were incarcerated for a long time for no real reason, but why are we punishing those people that are spending hundreds of thousands of dollars of their own money, that are now competing against not only the social equity applicants that haven't gotten their shit together, yep, but also the thousands of illegal dispensaries that have been opened while the state has been playing catch up with what they tried to set up. In addition to that, the companies that have the ability to come in and hire thousands of people, i.e. the MSOs, are being shut out, even though they've got medical licenses in these states, in the state of New York.
And good luck trying to win that conversation in this day and age, right?
It's impossible.
Yeah.
And I think that until people just see, like, look, I'm not saying that I'm against social equity. I'm against the fact that it's being used as a tool to make it harder for people to do business in this industry.
Yeah. Last thing I'll bring up, put on your visionary hat. If we see rescheduling in this industry, where are we 2 years from now?
If we see rescheduling and 280E goes away, we're off to the races.
Okay.
I mean, there's no question about it. I mean, you're talking about liabilities that are substantial. Remember, I mean, I believe it was Verano CEO who came out in a quarterly earnings report saying that he's basically happy to use the government's money as a way to because it's the cheapest money out there. So people aren't paying 280E and they're not current with it. I mean, they're paying it, but they're not current, and they're using that money because the penalties are they're not that severe with government's money. So that's going to continue. But if that goes away and liabilities are freed up from the balance sheet, that's a huge deal. All of a sudden, these companies go from no chance of profitability to not only EBITDA positive, but also bringing bottom line profits.
One can only hope, right?
That's right.
One can only hope, which is why we do this. Such a polarizing industry, that's for sure. Because the upside, the greatest days of this industry, if everything just falls in line, are still ahead of us. They're still ahead of us.
That's right.
Right?
That's right.
That's why we keep hanging on.
We're not going anywhere. We still believe that we're going to fight the good fight. Plus, we've got, over 300 investors that are hoping we do that, and so we're going to continue to do it.
Yeah, that's for sure. Ben, lead financial writer for the Dales Report. Thanks for checking in. Matt Hawkins, we'll see you a couple weeks. You going to be down at the Benzinga conference?
I will. See you guys there.
Yeah, it'll be a blast. I appreciate you checking in and appreciate the update, some of the conversations that you've had. I know it's not all greatest news right now, but it's great to keep people informed. But most importantly, if we see rescheduling, as we said, the bright days are still ahead.
That's right.
Long and strong. All right, guys. Appreciate you checking in.
Thanks, guys.
Take care.
Thanks, guys.
Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.